Hello friends, welcome back to my channel Easy Accounting Hub. Make your study easy. In my last video, I have explained about journal entry, how to journalize, what is journal and what is cash transactions and what is credit transactions, and we have done one question also. Hope you all understood that, and that is very important because this is the basic of accounting and you have to study it very well because in your plus 2 classes, degree level, and for when you are going for an accounts job, it is very important. You have to know the basic of accounting. So in this class I am going to explain what is bank transactions. In my last video I have explained cash transaction. There, when cash is coming into the business, we have to debit it. When cash is going out from the business, we have to credit it. Same like when bank is increasing. When bank is increasing, you have to debit it. When bank is decreasing, you have to credit it. When cash is coming into the business, your cash is increasing. Like that, when bank is increasing, you have to debit it. So same when cash is decreasing, when bank also decreasing, you have to credit it. So this is the basic for bank transactions. Then why you need a bank for your business? It is very important to have a bank account for your business to run it smoothly, for running the business smoothly, and it is very important because you have to handle your cash transaction through checks and bank transfer, so it will be more easy. So it is very important to have a bank account. It is very important to have a current account with your for your business. So bank is very important. Okay, so bank is an asset like cash, because something from bank there is some money in bank, so that is for us, so it is an asset. So bank is an asset like cash. So it is an asset like cash. So when cash is increasing, we debited. When cash is decreasing, we have credited. So like that, when bank is increasing, we have to debit it because it's an asset. So whenever asset is increasing, we have to debit it. When asset is decreasing, you have to credit it. So bank is an asset. So when bank is increasing, debit. When bank is decreasing, credit. So normally what are the bank transactions? Payment by check. Then check received from customers. Payment by check means paid rent by check, paid to suppliers by check, then paid salary by check. Okay, like that. Then check received from customers. Check received from customers for sales. Okay, then withdrawal of cash. We are withdrawing cash for business purpose and depositing excess cash into bank. So withdrawal of cash and depositing cash, deposit into business bank. Then bank charges. So bank charges also, there is these are bank transactions, and how to journalize these bank transactions. Okay, so let's listen for a question. Jan 1, cash deposited for opening an account as a capital, rupees 50,000. So a person, okay, so A deposited cash into bank as his capital. So when we are depositing cash into bank, your bank is increasing, and this is your personal cash, and you invested into business as a capital. So when you are depositing cash into business, your bank is increasing, your asset is increasing. So you have to debit bank and credit capital. So when bank is increasing, bank account to capital. So when cash deposited for opening an account, so bank to capital 50-50. Then check deposited from savings account as capital. So means he brought an additional capital of 1 lakh. That is a check from his savings account. So again bank is increasing. So bank account debit to capital. This is also he deposited as his capital. So bank account to capital 1 lakh. Jan 3rd, withdrawn from bank. So cash withdrawal from bank, rupees 3,000. So when cash is withdrawing from bank, bank is reducing and your cash is increasing. So cash and bank both are asset. when cash asset is increasing debit, asset is decreasing credit. So here bank is decreasing and cash is increasing. So cash you have to debit it, bank you have to credit it. So entry will be cash account debit to bank 3000. Okay, so withdrawn from bank for office use. This is for office use. Jan 4, withdrawn from bank for personal purpose rupees 4000. So the owner withdraw from bank for personal purpose rupees 4000. So this is for his personal purpose, not for business purpose. So we can call it as drawings. When the owner is taking goods or cash or check from bank or something from bank, it is drawings. So bank is reducing here. So drawings account debited to bank. Here bank is reducing. Then Jan 5th, placed a FD account from bank. So we have excess cash in our bank account. That's why we decided to put an FD. So we will get interest. So FD account, the bank is decreasing because this amount is going to FD account. So FD account is increasing, bank is reducing. So FD account also asset. So fixed deposit account debit to bank. FD means fixed deposit. So 50,000. So Jan 10th, goods purchased and paid by check. So we purchased goods and we gave a check, which means our bank is reducing because 2000 rupees is going from our bank and it is getting to the supplier. So this amount is removing from our bank. So our bank is decreasing. So we have to credit bank and we have to debit purchase. You can debit purchase or stock account or goods account, all are same, because when you are purchasing goods is coming into the business. So you have to debit it because asset is increasing. Goods is asset. So goods purchased and paid by check. Purchases account debted to bank, or you can write stock account to bank or goods account to bank. Then 15, sold goods. Amount received by check. Check deposited into bank. So we sold goods and we got a check for that and we deposited same day into bank. So that means your bank is increasing, you are depositing check. So your bank is increasing. Okay, so bank account debit to sales. Bank account debit to sales. Here the same day we deposited check. If we did not deposit in the same day, we have to write it in check in hand. So this is the same day we deposited, so we can return bank to sales. Then 17th, Jan 17th, sold goods to Rakesh against check 10,000. So sales to Rakesh 10,000, but this check against a check, but this check we did not deposit into bank, which means the check in hand, check in our hand. So instead of debiting bank, we have to debit check in hand. So check in hand account debit to sales. If we deposited the same check in the same day, we have to write bank to sales. But we did not deposit and the check we hold in our hand. So check in hand to sales. Then 18th, Jan 18th, check of Rakesh deposited to bank. So it is in our check in hand, and that check we deposited into bank. So when check in hand came, no, we debited, and so here check in hand we are depositing into bank. So bank is increasing and check in hand is reducing, or you debited already, so you have to credit it. So bank is increasing. When you are depositing Rakesh check, bank is increasing, so bank is bank account debit to check in hand. Then 20th, January 20th, check of Rakesh dishonored. Check of Rakesh dishonored means we did not get this money because of some reasons. So maybe bank rejected because of some reasons. So that means our bank is reduced. So this amount is collectible from Rakesh. So you have to debit Rakesh and to credit bank, because we already debited bank here and check in hand, but now this amount is not in bank because this check is dishonored, so we have to credit bank. So Rakesh account to bank. Then Jan 24th, received a bank draft from Rakesh and deposited. So Rakesh check got dishonored, so that's why Rakesh replaced a bank draft and that we deposited into bank. So again bank is increasing and Rakesh from Rakesh, so bank account debit to Rakesh. So So this Rakesh items, sold goods to Rakesh against check 10,000. That day we did not deposited the same check into bank, so we have to debit check in hand instead of bank. So check in hand to sales. Then check of Rakesh deposited next day. So then the entry is bank is increasing. When we are depositing, bank is increasing, bank to check in hand. Then check of Rakesh dishonored. So that means the bank you have to decrease because that amount is not clear to our account, that amount is not reached in our account. So we have, this is collectible from Rakesh. So Rakesh account to bank. Then this is dishonored, that's why Rakesh gave a bank draft, again that is deposited to bank. So bank account debit to Rakesh. Okay, so that's all about bank transactions. Hope you all understood this portion very well. I will come with a new topic in my next class, that is simple and compound journal entries. Okay, so watch my channel. If you like it, please share, like and subscribe. Post your suggestions in my comment box. Thank you for watching. Thank you very much.